Good morning, everyone. This is the Oshkosh Chamber presenting with Wifley, the third part of the whole change management during this time of great change within our community, within our businesses, and personally. I'd like to introduce Stephanie from Wifley, as well as Joe. And they are going to be our hosts, taking us through the third part of this, where the rubber meets the road, real world execution. And then Stephanie is going to provide us with some technical guidance on the second part of this call. So with that, I am going to hit mute, and I would like to introduce Joe. And Joe, take it away.
All right. Are you able to hear me okay? I'm getting a little feedback here.
There was a little bit of feedback, but I think you're good.
Okay, now, all right, great. Well, thanks for that introduction. We're really excited to get started with this. We've got a lot to go through. Again, I'm Joe Gerard. I've been in manufacturing mainly for 25 years, but for the last 2 years, I've worked with Wifley in various capacities in various industries. So not just manufacturing, but some construction and service industries, et cetera. I did graduate from Oshkosh North back in the mid 80s. I won't completely date myself, but earned an operations degree from Marion College before it became Marion University. And then I did get an MBA from UW Oshkosh. I primarily work with small and medium-sized business owners, again, with all operations and sales strategy, but also with transition planning to key employees or family members, or positioning it for sale. Been married 26 years, my wife Virginia, and one daughter. And then my co-presenter today, who will pinch hit at the end here, Stephanie Cavadeas, who's a partner out of our Green Bay office. Stephanie specializes in nonprofit and government practice, and she holds a BBA from UW-Madison, and she's very active in several nonprofits in the area. So I think you'll really enjoy her portion at the end regarding PPP, which I know for small businesses is something that everybody's probably talked about every single day for the last 6 months. So, all right, without further ado, we will get started really very quickly. So hopefully all of you have been able to join the first two portions of the series. The first one, Darren Kling talked about managing change, with practical tools, gave some methodologies. I'm sure if you did not join that one, those slides are available for you to get. But obviously, change management is very, very important when you're going through situations like we are now. And then the second one, Robert and Veronica did a great job, and I love the responding, recovering, and thriving categories. And certain companies have done a much better job of focusing on things like tech upgrades and their culture and human capital. I'll talk a little bit about that at the end, and really focusing on improving their processes. And then obviously the purpose today, we're going to try and tie everything together. So some common issues across industries. I know with the Oshkosh Chamber, I mean, there's close to 1,000 members, and it's everything from one-person companies all the way up through big corporations. And I know we cannot be everything to everybody, but I'm going to try and touch on at least a little bit of everything, so everybody's able to get something out of this presentation today. So our agenda real quickly. So I'm going to go through just a little bit of current state, what we're seeing. I did some interviews with some local companies just to kind of get an additional feel. And obviously in my daily work, I run across people from various industries and the challenges that they're running into. So some of the information I glean, I'll be happy to share with you today. Talking maybe a little bit about the next 12 months. Oop, did I skip ahead here? Yeah. So maybe the next 12 months and beyond, what can we look for? And I also want to point out, I did a webinar earlier this year for Loyola down in Chicago, and they were very interested in hearing. I did a couple slides on what people who really succeeded coming out of the last recession back in 08 and 09, what they had in common. And I'd like to just touch on a few of those points, and hopefully people can get some information from that. And then of course, Stephanie will talk about the PPP and some technical guidance and the latest and greatest. So current state, my goodness, as I mentioned, Chambers, quite a few very diverse organizations. You've got restaurants, you got bars, you got hotels, you've got manufacturing companies. But one thing is in common is they're all mostly your small businesses. I think small business categorization by the SBA is up to what is about $35 or $37 million. I would say most companies definitely fall into that category. And as I mentioned, I did interview people that own restaurants, and certainly they're struggling quite a bit, and people in manufacturing who maybe they're being very successful right now and their business is thriving, and certain companies are struggling because of maybe the market they're in. And even in some cases, you've got companies where they've got plenty of sales and plenty of capacity, but can't get employees to come into work. So there's all sorts of challenges we're dealing with. I think everybody's ready for 2020 to just be done. So current state of affairs, I've got a few notes on here. Of course, COVID cases, this is very recent, are on the rise. I had a client that I'm supposed to visit next week that we've had a tour set up on the calendar for a couple of weeks, and just the concern is getting higher. They said, they want to move things out to January, for a tour. And I think we're seeing more and more of that right now. Heading into the colder weather, restaurants and bars, especially in these cold weather areas that have been buoyed up a little bit by having patios and some outdoor eating, and certain delivery and such are going to really struggle into the colder weather. And there's an interesting paradox where one of the things you hear about, people are corona fatigued and everybody's tired of sitting at home and not going out and living their lives, but yet the data shows that more than half of them are still say that they're too afraid to eat at a restaurant. So something probably has to give between those two. There's really no second round of stimulus on the horizon. I think the latest that I saw was, even if something is approved as early as December, we would not see any of those benefits happening until, at the earliest, early January. So, it doesn't affect only additional PPP, which I know small business owners are not happy with what the latest round may show, but also buyer power. When you get more money in consumers' hands, they're more apt to come out and, order food from you and spend. One of the things that I mentioned earlier, I've seen a lot of companies where like, yeah, I've got plenty of sales and I got a big backlog, but either I can't find employees. Unemployment in Winnebago County is back down to 5%, which is really considered full employment. And between sometimes up to 20% of employees just don't come to work each day for various reasons, primarily the COVID and the contact tracing and all these additional things. So it just puts a really big burden on small and medium businesses. One thing to note, 90% of businesses have under 20 employees, and in the U.S., over 23 million businesses have actually no employees. So just trying to get a picture of what the small companies look like. And regarding restaurants, I'm going to touch on restaurants, service industry, and manufacturing to try and cover. Sorry, bankers, I did not do any banking notes for you, but you can lump yourself in with services. But really, as far as restaurants and bars, which are a lot of those are involved in the Oshkosh Chamber, no restaurants have ever created a business plan to account for 50% capacity. So, those sort of, without assistance, those things are just not sustainable. And it's really, again, like a vicious cycle. If you could have the product and service available to ship, but if people aren't coming to work or, are sick or other issues, you got social distancing that may impact your production. That certainly is something that we don't like to have happen. Unemployment overall in Wisconsin, from April went from 13.6 down to 5%. So that's been quite a shift in companies picking up new employees, and as well as calling back, some of their employees. But these next few months are going to be critical. I found some research, and I'll include the link at the end of this, just to give you some. Of course, Stephanie's going to talk about PPP at the end. But here's some stats that I thought would be very interesting to our audience here. Is that 90% of the borrowers so far have spent their entire PPP loan, and some have already applied for forgiveness, and some are still not sure how to go about that. But 1 in 5 borrowers anticipate, from small businesses, have to lay off more workers in the next 6 months, and over half anticipate needing additional financial support over the next 12 months. Those are huge numbers. Also sales levels are at 50% or less than pre-crisis for more than 1 in 5 small businesses. And And another 26% are only at 50 to 74%. So, we are seeing even ones that started out pretty hot and had, some good success earlier, starting to kind of see a reversal on that a little bit. Good news for some of you who are in this 17% where your business thrives during things like this. Congratulations for you, and hopefully you can share some of that success and insights with others. But some of us are exceeding pre-crisis levels. But here's a big one: is that close to 40% of small business owners are anticipating a net loss in 2020, and another 22% just aren't sure. So I'm sure that number is going to creep up closer to the mid 40% for a net loss. I think most of those are planning on rolling that back, for this tax year. But still, we do not get into business to lose money, of course. So. 1 in 5, this is a scary number, anticipate they'll need to close their doors if the conditions don't improve over the next, and this says 6 months, but certainly some of them are going to be more in that 3 to 6 months. So okay, move on to the next. And I know this is it's not so much designed to kind of jump around. I think you'll understand at the end why I'm trying to loop this all together, but I want to talk, so that's kind of current state, which I think we're all far too familiar with. But the next 12 months, I mean, a lot of it's going to hinge on, consumer behavior. And I just think that this category is just fascinating and what changed over the last 3 to 6 months. So, what does, the near future, next 12 months? First of all, if you know exactly, please call me right after this webinar, because I've not spoken with anybody yet that knows exactly what's going to happen over the next 12 months. I've gotten some economic indicator reports that are, fairly positive. Some are, neutral. When people ask me, what I see coming down the pipeline, I always start out, it depends. It depends on what market you're in. It depends on, what your current state is and your appetite for, let's say investment, or if you have cash on the balance sheet and you're able to kind of weather the storm a little bit. There's just so many scenarios. We cannot cover them all in this short of a webinar. So, but yeah, if you have a crystal ball, please give me a call. I'd love to hear what's going to happen. But some of the things we do know, and I'm going to cover restaurants and services, and then also B2B to make sure I include some of you manufacturers and construction folks out there. But make no mistake, consumers are changing their behavior. More buying and ordering online, which you see, and you're probably doing it yourself, more buying some more groceries. You go to Costco and everybody's hoarding, and their stock is of course going up, even though Warren Buffett just pulled all of his investment out of that, which I think is kind of a shocker. And really, I know there's people say that delivery and delivery services are going quite up, but the data actually shows that people are spending less eating out, including delivery. 73% of consumers have tried new shopping behaviors, and the most important stat on this is that more than 3/4 of those 73% plan to continue those new shopping behaviors after COVID. So I know my mom, who's 78 years old, probably never bought anything online in her life, is even starting to buy things with the click of a button on her phone. I know that's a little scary. I know once she learned how to send GIFs, my text will never be the same. But not, I mean, there's a lot of people who are starting to use technology more and more to make their purchases. Here's a very interesting stat: is that 21% of consumers, think about this, will not re-engage with out-of-the-home activities until there's a vaccine. And I know that there's, depending on who you ask, there could be one available by the end of the year. There's a lot of people who, there's certainly a percentage of people that will not get the vaccine no matter what. But another 29% will not re-engage out-of-home activities. You're talking about movie theaters, going into stores and that sort of thing until the government lifts restriction and there is a vaccine. So that's almost 50% of consumers are really kind of hunkered down for the foreseeable future. And that's a huge number. That's very scary. So, I mean, want to know if you haven't adapted yet, I mean, I hate to say, you'll be left behind, but you've got to kind of anticipate and learn what's working and trying to add that to your, to your business. So B2B, I know I didn't want to just focus just on, the smaller, restaurants and stuff, but what do we know in B2B, which is really kind of the world, that I live in? Consumers are changing their behavior as well. I mean, close to 65% of buyers that are looking to buy something online from a B2B have already, done all their research before they either get onto your website or reach out, to call you. It's harder to get customers to visit in person. If you have a product to sell and you rely on customers coming to visit you, they're not getting out. It's harder to have, go visit customers and suppliers to find new products and have interactions to develop new products and work on R&D. People are just less apt to have people visiting. But one thing to know, no matter what business you're in, is that customers want an easier transaction. We are seeing on our technology side a huge increase in customers who, maybe they had their neighbor's kid put their website together and they're like, hey, look at this, I got this, great website, and I send it to people when they want to buy something from me. And maybe even they've done a little bit for search engine optimization to show up on the right pages, but that's really not enough anymore. When you talk about your website, and if you're using it for e-commerce, whether it is B2B or B2C, there's so much more to it now, including loyalty and how long people stay on your website and engage. It's not just enough to get them to your site anymore. A lot of times I go to a website and I know within a few seconds if I want to do business with that company. So we're seeing a lot of that, even in our smaller companies that are saying we want our website to make us look bigger and make us look easier to do business with. Not just look easier to do business with, but actually be easier to do business with. Other business factors that aren't related to that, especially, but supply chains in certain areas are being impacted, especially those that procure from overseas. Don't believe everything you hear about everything getting pulled out of China. You'll see, some pieces of that, and it's going to be more for nationalism and somebody saying, look, we resource this to the US. And yes, there will be a little bit more of a made in the US, but no time soon is everything going to be unwound from China. It would take over 10 years and $100 billion, or maybe it's 10 billion. I forgot which number it was, but it's a big number to pull out of China. Staffing for full capacity is still a struggle. Again, with unemployment at 5%, and people still coming into work or not coming into work if they're sick. You can't get the product out if you don't have people there to produce it. And really the costs to keep employees safe are coming straight out of profits. I think I read the other day, and I don't think anybody feels sorry for Amazon, but I think they've spent, I want to say $3 billion alone just on keeping their employees safe. And all their different, I know they have the money to do it and some don't, but when I see these restaurants and other small places putting up, little bubbles and all the additional sanitizer and cleaning and shutting down to clean, there's no benefit to keeping, I gotta be careful how I say that. There's a huge benefit to keeping your employees safe. There's no financial benefit that comes from, that's really a table stakes. You have to keep your employees safe in order just to be able to do business. So that there's, it may come in handy for recruiting or retention if people believe that you're doing the right things to keep them safe and everything. But again, it doesn't directly lead to increased profit. So it's really just a cost. So I wanted to talk a little bit about somebody's timekeeper over there. Hopefully somebody's a timekeeper, but I did a lot of research and did a little presentation back in on what successful companies, back in 2008, 2009, what did they have in common? And there's a really good article. I put the link at the end, of the slides that Harvard Business Journal. I think they did the best job of explaining typical responses to a slowdown. And quite frankly, these are applicable whether you're a small business, medium business, or a large business. So I think this is relevant to everybody. But so the four responses that they note are, hang on, I had a little bit of one other note before I continue, is that coming out of 2009, 17% of companies did not survive that whole recession. And some of that they may have been acquired, but still they did not continue as their own entity following that 2009. And a full 80% of them had not regained their pre-recession growth rates even 3 years after the recession. And only 9% of companies typically outperform their competitors by 10% or more. So I want to kind of point out some of the things that some of those had in common. So there's really 4 responses to a slowdown. The first one is defensive, where, and I get it. So if I say don't start cutting your employees, definitely everybody needs to react, according to their own situations. This is a general discussion, so please don't call me and say, what do you mean I'm not supposed to cut any of my staff? We don't want to do that, but my point is, if that was the only thing that companies did, when a slowdown hit, was to start cutting employees, it focused only on their competition and trying to avoid losses. Employees that you have start to really just focus on, their own survival. They're not, creative. They're not engaged. They don't like to work for, companies that they're always looking over their shoulder, whether they're going to have a job. So defensive, and I'll show some data right after this on what is good and what is bad. So I'm not saying it's bad. I'm just saying it's typically not the only thing that you can do. And that's obviously why the government put the PPP in, so companies could, keep their employees on. Everybody benefits when that happens. One other note that I did come across, Stephanie, I don't think you have that in your slides, but if you did not get a PPP loan, I know there are government employee retention bonuses, or grants, I should say, for up to $1,000 per employee. So if you're one of the companies that did not take PP for whatever reason, please look at those grants and see if you're eligible for employee retention grants. The second one I want to talk about is optimistic. So this is the opposite of hunkering down like a hedgehog and saying, look, I had back in the early 2000s, I had a business owner tell me, we're going to choose to not participate in the recession. So it was overly optimistic. They said, we're just going to start acquiring other companies, and that's all we're going to focus on. And I'll show you why that by itself is also not great. What really happens, and what you really want to have, is if you have all optimists on your team, it's not good. It is okay to have the naysayers and people that kind of keep you grounded and be able to have those healthy, disagreements, because it really helps you kind of see the pitfalls and potholes that are coming down the road. The next two, so a combination of those two, it's sort of self-explanatory, and I'll talk a little bit more detail on the next slide. But when you just cut staff alone, as I mentioned, recovery is a lot more difficult. Trying to hire those people back, your costs go way up. You've got, due to training and onboarding, and it just by itself is just much more difficult. But when you look at the balance one down here, where you're combining the optimal combination of offense and defense, you really focus a lot on operational efficiency, but also operational efficiency versus, cutting employees. I mean, what you don't want to do is, cut employees and then everybody has to we're going to do more with less. You hear that all the time, but if you don't make any other changes regarding improving your process or implementing technology, then basically you're just working your people, harder to the point where, they're just going to raise their hands and call uncle. But operational efficiency, asset development, a lot of companies, if they have the means, you have a balance sheet and you feel a little more aggressive. Maybe you're earlier in your your career. Some people look at acquiring or a competitor, or acquiring the assets of a competitor. You need to do that strategically. But you look around at at real estate. I'm sorry for some of the commercial real estate people. The buildings are empty and people are starting to rethink that. But if you're looking for office space, or you're looking for a building to do some production, and you've got a lot of choices, right now, and typically you can take advantage of that availability. So here's a chart that came out of that HBR article, and here, so along the left you see the prevention focused moves, and along the right are the promotion focused moves. So this is the kind of the hunker down, and this is we're going to be a little more optimistic. And the biggest things to note, I mean, here's one of the things that really jumped out at me is that again, employee reduction on its own is not bad unless you're doing only employee reduction and then going out and buying a bunch of new assets or building a new building. But if you do have like an employee reduction alone, and you're trying to grow sales and you're trying to acquire other buildings, but you're doing it with less people, those companies showed the worst sales growth, in most cases a reduction, and a huge reduction in their EBITDA. And the best combination, going back to that pragmatic approach, is first focus on your operational efficiency. But then also once you have your processes improved and you are able to do more with less, but without higher strain on your your workforce, you look at how can I work on my sales strategy and analyze my entire business plan, to make sure and take advantage of opportunities that might be out there. Because if somebody's struggling, that's an opportunity for someone else to kind of step up. An asset investment, which I would also include an asset investment, technology investment. And again, there are tools out there that allow our clients to find new markets sooner. They're able to manage their field workforce better. I mean, you name it. Industry 4.0, for some of you who are in manufacturing, we are seeing such a burgeoning service around Industry 4.0 and digital manufacturing and digital transformation that it's hard for us to keep up in that. Quite frankly, a lot of companies have old ERP systems that just do not do what they need them to do. And so combining, asset investment, market development, but also with operational efficiency led to the biggest improvement in both sales and EBITDA growth for those companies coming out of the recession. And here's a chart that just kind of demonstrates a different visual: sales on the left, EBITDA on the right, and how Progressive far outperforms all of the other different approaches. So as a wrap up, prior to me turning it over to Stephanie, pretty good timing. I think I'm pretty close to the 30 minutes, so that's good. But you're probably thinking, what does this tell us? What does this mean, Joe? And here, here's a few things, and hopefully, some of these can apply to both the smaller companies, the little 5-person shops downtown, and the 500 people manufacturing firms. But here's some common themes that we see on companies who are thriving rather than still recovering and really just trying to keep their heads above water. Is regardless of your business, there's 3 things that you should really focus on, and these are really not necessarily in any particular order, but human capital, training, recruitment, and retention. Those are huge things right now, and especially if you're recruiting people from industries that maybe weren't part of your original industry, and they're looking for a career change, and they're looking to get into a different work that maybe you provide some stability. Doing the training and recruitment or retention strategies are just huge toward that. Safety, of course, I mentioned people want to know that they're safe working and that you care about them. And just communication. You've got have regular touch points and scrums with your team to make sure that they're in the loop. The worst thing is having people start the little rumor mill behind the scenes, and those things can just really derail a business. So over communicate, with your team. We look at sales strategy, going back to, companies who maybe their top line is shrinking a little bit. Obviously you want to reduce your operating costs and reduce your operating costs in a way that they will, be permanent changes. So just short-term cuts that are going to cost you more as things, pick back up are not the right, tack to take. And your profits, quite frankly, will grow faster. If you can scale those improvements where you've reduced certain costs because you've improved your process or added some technology, and then as things scale, you're able to just handle more business with that same level of, whether people and processes, certainly your profits grow faster. And put time into your sales strategy. We see a lot of companies now that want to just get into a room and say, okay, have I explored other markets for my products? Have I thought creatively around what other products with it that I can grow organically? I mean, it's kind of a dumb example, but look at like Domino's. You see the commercial where they found that some of their competitors are delivering tacos and what's the other one, burgers, and they look like crap. So they created a taco and a burger pizza, and their sales are just exploding. It sounds silly, but I mean, if you start to think about what's your taco pizza or what's your hamburger pizza for your product, consumers are out there looking for alternatives. And then closely evaluate your technology. Again, whether you're a small company, I use that website and e-commerce as an example. I mean, I know 1-person and 2-person companies that are able to handle all of the leads and things that come through their website because they put a process in place and they've created the infrastructure. So they're not the ones that handle every lead, and they've got to go through 50 of them to find 2 good ones, and then they complain that they don't have enough time to find new customers. So use technology to your advantage to vet out leads and make it easier for customers to find you and have a better user experience. And on a final note, for you smaller businesses, there is a support local Oshkosh on Facebook that I can tell you, if you're a restaurant or one of those businesses and you're not on there, you need to get on there, because those, number one, you'll never see a negative review. They don't allow them on there, but there's a couple companies, I think 314 Pizza I saw on the Oshkosh Chamber. I don't think anybody would have ever heard of that little pizza place that opened way down on Bowen Avenue without support local Oshkosh. And in their first couple months, they were running out of product every day because there were so many people there. So use the local social media as much as you can. Go network wherever you can. I know it's more difficult to get together in meetings and big groups, but get on LinkedIn and find other people in your area and within the chamber. Talk to Rob or talk to people at the chamber who's similar to me but doesn't compete with me, that's being successful, and find best practices and implement them, for your business. And pick their brains, get mentors and have somebody that's willing to bounce off really out, that you can bounce odd ideas off and can really challenge you. And I think you'd be surprised at, what it can do for your business. So with that, I am going to turn it over to Stephanie to talk a little bit about PPP.
Thanks, Joe. And as Joe mentioned early on, PPP has been a critical part of a lot of businesses being able to sustain operations and being able to pay their employees during this really challenging time. We've been getting a lot of questions from our clients and our networks and associates about PPP because it's been so uncertain. There's been a lot of fluctuating clarifications out there. And so I wanted to spend maybe 5-10 minutes talking through some of those common questions, common discussion points. If you're at the point where you're ready to start applying for forgiveness, hopefully this is helpful. If you've already received forgiveness, great, that's wonderful. But now's the time where a lot of folks are really starting to plan for this. So, talk to your accountant, talk to your auditor, talk to your lending institution, and just gather as much information as possible. And if you have questions after today's session, you can certainly reach out to us. On the last slide, we have several individuals in our PPP expert group. Tracy and Jeremy have been really instrumental in our market, making sure that our clients have the right information related to PPP. So we're always willing to help, but hopefully you can just get a few helpful nuggets of information in the next 5 to 10 minutes. So there's 4 or 5 slides here. I think there's 15 overall points, and I'm not going to go through every single one. We spent 40 minutes in our audit and accounting webinar last week with our internal associates talking through these items so that we could be informed when we interact with our clients, and we could have spent an hour and a half. So this is going to be very fast, very high level. And again, I'm not going to go through every bullet point, but we have been hearing a lot of concern about, the fact that the SBA is automatically going to audit PPP loans over $2 million. So, if you're a large enough business and you had a large enough PPP loan, you just need to anticipate that that will be audited by the SBA. The SBA does have the ability to review loans below 2 million. So you're not off the hook if your loan is below 2, but just be aware that that's kind of the threshold for some additional scrutiny. There's also some variability in the covered period. The Flexibility Act in June allowed borrowers at that point to automatically have a 24-week covered period. If you applied in April or May, you would have either an 8-week or 24-week covered period. Virtually all of my clients are choosing that 24-week covered period just to make sure that they have the ability to get as much of that eligible expenditure in that covered period as possible. Just one final point on this slide. Obviously, we all know we need to apply, but we also need to pay for those eligible expenditures. There's been a lot of confusion about, particularly in the payroll cost area, but really that's the cash compensation, the vacation, PTO, hazard pay, and any employer related insurance, retirement, or state and local taxes. So any of those costs certainly can be eligible. The non-payroll costs, really relate to those agreements that are in place before February 15th. So you can't just enter into a short-term lease on March 1st or April 1st or May 1st and charge a bunch of rent and try to get that reimbursed. So it is subject to some stipulations. We could go on to the next slide, please. Great. So, we know that there's some variability in the covered period, but we also know that during the forgiveness period, you'll have those payroll costs and those non-payroll costs. But there's also variability here too, depending on whether you're choosing just the normal covered period, which starts on the disbursement date of the loan, or whether you're choosing an alternative covered period, which would start on the first pay period following that disbursement date. And that's really been beneficial for companies that have a biweekly pay cycle that just doesn't align well with the covered period. So that's been a nice opportunity for businesses to really align their cash disbursements more closely with their covered period. On the other half of this slide, in order to be an eligible expense, we know that amounts must be paid during that period, either the covered period or the alternative covered period, or incurred during that period and paid right after that period ends. And I've had a lot of questions about, well, what if I prepay some costs that I don't normally cover, and can I get reimbursed? Is that part of my eligible cost in my forgiveness application? And the truth is that those are not. The PPP is meant to cover those normal operating costs that you really perhaps don't have the cash flow for. Next slide, if you will, please. So there's also some limitations on a per employee basis in that payroll cost calculation. And this is based on an annualized $100,000 annual compensation limit. So over 8 weeks, that would be $15,385 per employee. And over 24 weeks, that would be $46,000. So again, that's non-owner employees. For those of you who are owners of businesses on the call, owner employees are subject to their own payroll cost limits, including limits on cash compensation, health insurance, and retirement contributions. That's going to be based on your ownership percentage overall. The last point on this slide, eligible costs on your forgiveness application can exceed your PPP loan, but just remember, and this is a logical conclusion, you're not going to get forgiven for more than what your PPP loan is. The lending institution can't do that. But the key point here is 60% of your PPP proceeds must be used to pay eligible payroll costs. And we remember that came down from 75%. If it's not at 60, you're subject to a reduction in forgiveness. It's not all or nothing. So if you're less than 60, it's not like you're going to get zero forgiveness. Just expect a lesser forgiveness than if it were 60. Next slide, please. I think we're doing good on time. A couple of reduction notes. I've gotten a lot of questions about reduction as well. Obviously, the overall goal of PPP was to keep people employed, keep them paid, keep that money flowing through the economy. If employers were not able to maintain an average FTE level in relation to a reference period, that is subject to reduction. There are two reference periods that you can choose. There's a 2-week period in 2020 or like a couple month period in 2019. Those are optional. Choose the one that is more beneficial to you when you're calculating your forgiveness. There's also a reduction based on compensation reduction. So if we're reducing average salary by more than 25% as compared to the first quarter of 2020, that's subject to reduction as well. But there are some safe harbor exceptions that exist as well that could prevent a reduction. Also a no-brainer, you need to submit an application for forgiveness. I think we were all hoping there would be some auto forgiveness in play for maybe small loans or smaller borrowers. That's currently not available. So there are 3 different applications based on your size. So work with your lending institution on that. You can file for forgiveness at any point in time before the maturity date of the loan. On the next slide, I'm going to talk about there's a 10-month period that's important, but you can file for forgiveness whenever you're ready, assuming you have aggregated your appropriate eligible costs. The timing is important here. I've been getting some clients who have been forgiven already. It's typically taken anywhere between 30 and 60 days. Once you file that forgiveness application with your lender, they have 60 days to render their decision. and then they turn it over to the SBA, and the SBA has an additional 90 days. So at most, we're looking at about 5 months. Hopefully it's less. I would say that the sooner you get it in, probably the more likely it is to move more quickly. There might be a deluge of applications here in the next quarter, I would think, as people reach the end of their covered periods. And a couple of final thoughts on the PPP. Your loan repayment is deferred until you receive notice from the SBA regarding forgiveness, as long as you complete that filing within 10 months of the end of your covered period. So the clock really starts ticking when your covered period is up. And you want to make sure you get that application in so that your payments will be deferred. If you don't, then you'll have to start making payments, even if you file for forgiveness after that 10-month period. Any amounts not forgiven are repayable to the lender over a period of 2 or 5 years with interest at 1%. So depending on when you applied, if it was before June or after June, you might have a different maturity period, but you will all be at 1% interest. And probably the $1 million question that we're getting most often is taxability implications. And I don't have any super answers for you today. There's a lot of unknowns. What we do know is that forgiveness income, when you recognize that income, is not taxable. However, as of right now, the expenses that you are using to qualify for forgiveness are not deductible. So it's almost like they will be taxable at some point. We're hoping that that is going to be re-examined in future legislation. And what is also uncertain is the timing of when you would pull that out of your deductible expenses, whether it's in the year the expenses were incurred or whether that's in the year the income is recognized. So again, a lot of unknowns. And again, no clear guidance on how the disallowance of those expenses from being deductible could affect other tax items like R&D tax credits. So hoping that a lot of these things will be clarified. You know, there are 6 weeks left before the end of the year, before the end of the taxable year. So hoping that either the IRS or the SBA provides some good guidance for borrowers as they, endeavor to get these loans forgiven. I think there's one more slide. This is the nerdy side of me. I'm an auditor, but I've gotten a lot of questions about clients. Well, what do I do with this on my financial statement? If I get an audit or if I have a review, how do I put this on my financial statement? And the answer is depends. Most for-profit companies are going to present it as debt, similar to bank financing. And it would probably be current if you apply for that forgiveness within your covered period timeframe. Could be part current, part long-term. Some for-profits are going to choose to analogize to an international accounting standard, which says that you could account for it as a government grant and essentially recognize revenue as you incur those allowable expenditures. A lot of people like that because you can match your revenues with your expenses and you're not showing a huge swing year to year where you've got the costs in one year and you've got the revenue in another. And then there's a third option. Nonprofits are going to land mostly in this bucket where they're going to treat it as a conditional government grant versus as debt. And then when it's forgiven by the SBA, that's when they would recognize the forgiveness. So these are all options out there. The AICPA has weighed in, the FASB has provided some information on these, but I would just encourage you, if you get an audit or if you have a review, just make sure you're talking to your accounting professional and that your policy choice is clear and that you're disclosing whatever you're choosing to do. But there's a lot of confusion in general. So do we want to check to see if there are any questions out there, Patty? Oh, this slide, we've got a very robust COVID-19 resource page. So if there is anything you're curious about Whitfly or what we do or what we can do for our clients, just hop out there and take a look. And then the last slide is just some pictures and some names of faces of folks who have contributed to put together the information for this web series that we're deeply grateful for. You can reach out to any one of us. John and Mark and the team at the Chamber have our contact information, and we're always happy to answer any questions that you have. So Patty, did you see any questions come through?
Stephanie, I did not, but I'd like to highlight for our participants that are joining us. At this point, if you would like to send any questions via chat, I am looking at it. And if there's anything you would like to ask at this point, please do so. And as we are waiting, I want to thank both Stephanie and Joe for joining us today and for their ongoing guidance in this area. Very appreciated. And thank you for the 3-part series.
We're happy to do so. And
I do have one came through. It says no questions, but thank you all for your time and knowledge. So thank you, Michelle.
Our pleasure.
Thank you.
Thank you all so much. And we're right on time. So thanks for joining us for this lunch session.
Have a great day. Thank you.
Take care. Thank you, everyone.